I saw him. So yes.
Okay. Good morning, everyone.
Good morning, sir. Welcome, welcome. Thank you, sir.
Seriously, I'm really so honored. I'm really happy to be here. I'm so honored. I don't know how to express my appreciation to everyone. Our chairman, I should call him the pilot. He's the pilot. You know, when a pilot does not know how to pilot well, other people will run into the plane must surely crash. But he's really doing a good work here to pilot well. I'm really so happy. I want to appreciate all our leaders, Dr. Love, Dr. Dukbe, Dr. Oje, you, our Forex lady boss. Thank you very much, everyone. I'm so happy for this privilege you've given unto me this morning. Our big, we just gave me a title, the doctor of Forex. Ms. Ezekiel, I'm so happy for you, seriously. Yesterday, you gave us so much value. I learned a whole lot. I'm so happy. I want to really thank God for World Hub. What I come to learn in World Hub, I don't know how much I would have paid to learn. But the privilege you people have granted me to learn here, I'm really happy. Thank you so much. God bless you. And all our facilitators, all leaders, thank you so much. I want to talk today about BIXI. So while I'm doing that, I think I should share my screen so that what I need to touch, I should touch. What I need to touch, I can touch. What I need to show, I can show. Let me go to my trading view. Let's please, Mr. Ezekiel, how many minutes do I have? How many hours? How many minutes? No, minutes, not hours. How many minutes do I have? So
let's say if you can take it to 10:40, sir.
10 to 40 minutes.
No, as in 10 to 10,
okay.
From now to 10:40. So we have room for questions.
Okay, sir. All right, sir. Let my my trading view load. All right, so I can, whatever I need to touch, I can touch. Let me clean up something. Sorry. All right. Thank you. Welcome one more time. I want to talk on BIXI. In fact, how did I come to know BIXI? I just knew it in the course of in the course of asking me to do presentation. I was only initially I used to see BIXI. I just passed and I didn't give any attention to it. So I needed to see what it means. Seriously, that's why I'm thanking you, please, World Hub. Thank you so much. Whoever does not want to learn here, you're missing out too, because what you're learning here, if you're supposed to pay money, like I said the other time, SMC. I went, somebody introduced me to someone that said he trades SMC. So I didn't know anything about SMC. And the person said he's going to collect $300. And I beg. Finally, he said $250. I said, please, 200. He said he won't collect. So I left. No, here coming in, I learned it free. I didn't pay money. I didn't pay money again. I learned it free. So whatever you see here, please learn. Whatever you need to record. Like me, when presentations are done, I do screen recording. So I do so I can have the video. I do screen recording. So to get a little, in case that thing is not posted in the group. That's what I do. I learn every day. I'm learning because I want to be a professor of Forex. That's what I want to be. Thank you so much, Mr. Ezekiel. You're amazing, brother. Everything. So let's start. BIXI simply means buyer imbalance, seller inefficiency. That's the meaning. So in SMC, buyer imbalance and seller inefficiency refers to an area on the chart where price moved aggressively in one direction with little to no opposite orders being filled. That's what we refer to as our fair value gap. So price just move aggressively and move away from that direction to could be either a sell or a buy. So this zone often acts as magnet for price to revisit because the market tends to balance inefficiency. I will need to break it a little downward so that we understand. So what does it really mean? I want to explain in a bullish, the bullish imbalance in a bullish market. This occurs when price shoots upward very quickly with big bullish candles and little to no bearish presence. I will have to pick up. I'm using a phone, please. Why I'm using phone is that I want people to have understanding with understanding that if you don't use your laptop, you don't win in Forex market. That's why I like using phone when I'm doing my training or when I'm doing my review or presentation. I like using phone. So we have learned so long about FVG. So this imbalance occurs during this time when price shoot up suddenly without control, very suddenly just shoot up. That's in a bullish trend, bullish imbalance. Price shoots up suddenly, quickly, and without any bearish presence. Like what we had, I think this happened on yesterday. Something happened yesterday. Before we know, after a long consolidation, price just moved quickly, and it went up without any bearish presence. So this means buyers dominate heavily, leaving a gap where sellers were inefficient. It leaves a gap. The presence of sellers were not noticed in any way. Presence of sellers were not noticed in any way. So price just moved abruptly and shoots up. The same thing is also applicable to a selling to a bearish inefficiency. So price often revisits these zones to mitigate orders. So like I said, in the same thing is happening. So in a selling in a bearish imbalance, it happens the same way. It happens when price drops sharply with large bearish candle and minimal bullish reactions. Sellers dominate the move, leaving an efficient zone where buyers don't participate. So market may later return to fill that gap. So that's what we call BISI is found in FVG. It happens in FVG. So like we have been talking about FVG for a long time now. I think everybody should know. About this FVG, it is here in World Hub that I come to understand FVG. I was always hearing it, and I just said I would go and learn it. So that is where it is where we see it. So how do we spot them? How do we spot these places? So the first thing we do is to look for. There are always 3 candles involved in spotting this gap. 3 candles involved in spotting these gaps. So I think I will do a little. I will come to my. All right. I'll come to my charts. There are 3 candles involved. First of all, there must be a candle before the move of the price. There must be a smaller candle. After the smaller candle, we have a bigger candle and then another candle. There must be 3 candles involved in this process, like what we could have here, that we could have here. They say there should be there must be a smaller candle first, and then another big candle, another smaller candle. 3 candles must be involved in spotting out this space. So what we do is to look for those 3 candles formation. So for bullish imbalance, a strong bullish candle between 2 smaller candles, leaving wicks not overlapping the body of the middle candle, not overlapping the body of the middle candle. So you see a candle, is a big candle moving here. This is what we have here. I just want to set this as an example. This is what we had here. There was a candle here, a smaller candle here. Then suddenly this candle just spiked, moved up straight and moved to this point before leaving this other candle. This is where we have the gap, which the market left. It left this gap and went up and went up and went up and went up. And you can see there's no way market will not come and fill this gap, either now or later. It's going to fill up this gap. So this really means that the buyers dominated this market. No, they didn't allow the presence of the sellers. Normally, market is supposed to move in presenting a higher high, higher low, higher high, higher lows, higher high, higher lows in a bullish trend, or presenting a higher lows and a higher lower highs and lower lows, and then moves in a bearish trend. But this was a quick spike, leaving this gap unfilled, leaving this gap unfilled. So that's what happens. That's what happens. The same thing is applicable to a bearish candle. We see a strong bearish candle between two candles. They gain again with a gap between the two of them. So in a chart, we are going to see the gap. You see a gap in price movement. This is the gap we are talking about here. This is a gap here. This is a gap. That's why you see this market came down here to fill up this place. It came down here to fill up this place because market cannot just go like that. The market hates to be hates a gap to be created. It hates a gap to be created. Then how do we trade them? How do we trade them? The first thing we do is to identify market direction. That is the market structure. Either it is the bearish market or the bullish trend. Either the bearish trend. We have to first of all understand the trend of the market. How do we understand the trend of the market? I think we talked about it the other time. Like me. This is how I understand the trend of the market. First of all, I will see the overall direction of that market. Where is the market going to? I will first of all go to like maybe let's say 1 month to see the trend of the market. After establishing the trend of the market in 1 month time frame, that's what I normally do. How do I do it? This is what I do. This is what I do. Let me delete these things. All right. This is 1 month time frame. I hope my chat is visible.
Yes, sir.
Please. Thank you. This is what I do. I pick up the last 4 candles. The last 4 candles. You know, we know for those of us that are new here, for those of us that are new in trading, every candle at this point represents one month. So this very candle here, I'm picking my rectangle here. This is my rectangle. Every candle here represents one month. This is September. This is September candle. This is August candle. This is this August candle. This is September, July candle, and this is June candle. So we have 1, 2, 3, 4 candles here. So what I do is I pick the last 4 candles so that I can understand the trend of the market. Where is the market going to? So I come to the wick here. It has to touch this wick and it has to touch the upper wick. This candle does not have a wick. It's a printing candle, but this one has a wick here. We have this wick here. So what I do is to tap here, take this up, and then pick it till the end. After doing that, I will come to pick my my horizontal line to come to where the current price is. So I now put it here. This is where the current price is. I tap it there. Now that tells me that the market is a bullish, because where we have the current price is on top of the rectangle. Is on top of the rectangle. So that tells me where the direction of the market is. So whatever I will do, I will have in mind that this market is a bullish market. That's what I do. If I have to sell, I will know that the sell may not be too long because I have seen the overall trend of the market. Just like one chairman said yesterday, that is, even this morning, chairman said, is he holding his buy? Because he knows where he's going to. The market is a bullish market. So whatever, if you enter a sell, understand where you're entering a sell from, because the market is still bullish. So with this, I now know where the market is going to, and I'll delete this. But if I'm not able to establish the trend of the market using 1 month time frame, what I will do is I will go to 1 week time frame to establish a trend. If, for instance, the market is bearish, like maybe this price is somewhere here at the middle here, in the middle of that box that I created. So what I will do is to go to 1 week. But now I have established there's no point going to is going to my this thing again, going to 1 week again. So that's how I establish the trend of the market. So like I said, the first thing we do is to identify the market direction, the structure of the market, whether it is a bullish market or it is a bearish market. Then now we trade the imbalance only in line with the trend. That's what we do. You trade the imbalance only in line with the trend. You cannot trade the imbalance, a bearish imbalance, and then you're bullishing. Definitely you're working against the trend. Like we normally say that the trend is always our friend. So the next thing is to mark the imbalance zone. So we draw a rectangle from the body to wick of the inefficient area. This is what we do. I think I spotted it when I was in 1 hour time frame. Let me check 1 hour time frame. 1 hour time frame. So for us that are new here, sorry, let me delete this off. All right, those that are new here, all right, I think this is visible enough. For us that are new here, let me look for a clear place that I can get it from. All right, then let me use this. So what we do is we mark out the imbalance zone. How do we mark out the imbalance zone? You take up your, okay, let me use my rectangle so that it will be easier for me. There's every tool that I'm using, I will let us understand this. So this is where the price spike off from here. He left these points. Price left these points. And then another one came down here. So the imbalance is in this middle. So what I do is I pick this, that's my rectangle, and then draw something like this. Can we now see? Draw something like that. I draw something like this. So we can now see the imbalance level. It has touched now, my drawing has touched this level. My drawing has touched this candle, the tail of the wick of this candle. It has touched here and then touched the head of this candle. No, we don't forget that we said 3 candles are involved. This is the first candle that is involved. This is the second one that just spiked up. And then this is the third candle. So in between here and here is where we are going to see the imbalance. And if you look at what happened here, price had to go up, then came down and filled up this imbalance, that space between here and here. That's what happened. He came and filled up this space before moving up, because it wouldn't be nice. Market will be unfair to itself. So that's why we call it fair value. Fair value. It has to be fair to itself. So it will be unfair for market to just spike up like that and start moving boom, 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 without coming back. Even what we saw yesterday, and the market was spiking up, definitely either this week or next week, that price is coming back to fill all those gaps that it left, and then gave the market a balance. That's what happens. So the next thing we do is to wait for price to retrace back into the imbalance. That's what we saw here. After we had marked this, and we marked this, this was the price inefficiency that we were talking about. This was the buyer's buyer's imbalance, and this is the inefficiency, because we did not see the presence of sellers here. So what happened was, after we marked this, the price will now come back. Wait for the price to come back and tap into this to fill the imbalance. That's what happens in a BISI. It will come in and fill the imbalance. After filling the imbalance, when it fills the imbalance, that's when we now place our buy, following what we saw in the larger picture. Following what we saw in the larger picture. Like I just showed us how we established the larger picture, the trend of the market. I just showed us. For those of us that are new here, I'm not talking to the older people. Other people already know already knew what I'm talking about here. But for those that are new here, that's how we create the trend of the market. So after doing that, You wait for the price, let it come and tap. Look at this one here. Price later came down from here and tap into this zone. Look at the zone, almost like the middle of this imbalance. And then there's something I will talk. Let me hold it for now. Then let's keep going. I will keep it there so that I will say something. So the same thing is applicable to a bearish trend. If it is in a bearish trend, we wait for a retracement into a seller inefficiency. So we look for short. So like here, we are looking for a long. We are looking for a long buy. Or in crypto, we call it long. Or either we call it long, or we call it bearish or buy. Long, bullish or buy. Shorts, bearish or sell. I think the same language. So when you hear us mention long, you know what we are talking about. When we say long, is buy. When we say shorts, is sell. I think mostly we use that in cryptocurrency. We use the long in cryptocurrency when we are trading. I started live with crypto, so I still have those terms inside me. Now, the next thing we do after we have done that, what we confirm with entry model candle. We don't just place order blindly. So there has to be a confirmation, an entry model confirmation candle. So what are we saying here? There are two major candles we use for entry model. There are two major candles. What are those candles? We find those candles in 5 minutes time frame, 15 minutes time frame, and then 30 minutes time frame. Sometimes 30 minutes time frame. Please, if you're using your 1 hour time frame to do analysis, you don't enter trade using your 1 hour, because if you enter trade using 1 hour time frame, you will miss out. You use 1 day time frame to spot out your zones, 4 hour time frame to spot out your zone, to confirm what you have seen in 1 day time frame. Then 1 hour to confirm. After you have done your confirmation, you switch your time frame to a lower time frame, like in 15 minutes time frame. There are some people that use 5 minutes to enter, some people that use 1 minute, and people that use 15 minutes, but it shouldn't be more than 30 minutes. So you find a candle that we call a pin bar, or a rejection with a candle with a rejection. Some people call it hammer, a pin bar. How does it look like? You see a candle like this with a long wick. See a candle like this with a long wick, like something like this with a long wick and a body here, a small body. Tapping inside your zone, something like this. But I'm using 1 hour here. It's not right. I'm supposed to use maybe 3 minutes, 5 minutes, or 15 minutes. Let me go to 15 minutes so we can see it well. Sorry. My candle just disappeared. All right, seen it. Sorry. All right, so we use 15 minutes time frame or 5 minutes time frame. Now this is 5 minutes time frame. Supposing I had a zone here. Supposing, I think I've not seen a candle like this. Look at the candle I'm talking about here. Look at the candle I'm talking about here. This is what we call a pin bar. Pin bar. This is number one. This is pin bar. You see a candle like this in your zone. When you see a candle like this in your zone, please don't hesitate to enter your trade. What it means is that the price has been, they're selling, if you see it, irrespective of the color, if you see this candle inside your zone, the zone that you had marked, that zone that you marked, if you see a candle like that inside that zone, irrespective of the color, whether it is a bearish candle or a bullish candle, please have that understanding that that market had been rejected, the price had been rejected. So enter without any fear. Even if the price has to come back to that zone, it will not go below because there had been a rejection. And a trade that you take like that in that zone will definitely take you up. If it is a buy, it will definitely, when price leaves that place and goes, it won't come back easily. So you're on a safe trade. If it is a bullish, if it is a bearish move, once you see it tap into your zone, the resistance zone, the supply zone. What you do is to place your trade. When you place it, and now the next candle is what we call an engulfing candle. An engulfing candle. So how does engulfer look like? This is how it looks like. Think this is a very typical example. We have a pin bar here, and we have an engulfer here. Pin bar here, we have engulfer, just like we have here. When we have it other. I think this is a typical example. This is the pin bar that's tapped into your zone. As long as it taps into your zone, and then the next candle engulfs it. Any other candle that engulfs has simply mean a bigger candle. So you have those two candles, a pin bar and your engulfer inside that your zone. Inside that your zone. Once you see it, that gives you a confirmation. That gives you a confirmation of that market. That gives you a confirmation of that market. That gives you a confirmation. The next thing we do is, so in SMS, confirmations like market structure, shift, order block, and liquidity sweep. Those are things. We don't use only the zone to make a confirmation. There are still other things that you can use to make confirmations, like an order block, like liquidity sweep. I think Ms. Ezekiel really took time yesterday to talk about the liquidity sweep. Liquidity sweep is, for instance, like that zone that you have, that your zone, then market will just come and spike down, goes down. You see it spike down below that zone. Now, I just want to give us an instance here. Let me give an instance here, what we mean by liquidity sweep. Let me give us, I'm talking to, this is what I would say. For instance, you had marked this zone. You had marked this place. Maybe 1 hour time frame, 4 hour time frame, 1 day time frame. You had marked this zone to be a zone to take a buy. Look at it there. All right. Look at it there. And then this price now came suddenly and spiked this this zone and came down. This is what we call liquidity sweep. This is what we call liquidity sweep. This is where the big boys, normally take people's or stop losses, all those stop losses. They just wipe them off and all that. A lot of orders were placed around here, and sometimes after placing the order, some people had put their stop losses around here, below here. After placing orders here, they had put their stop losses around here. But you see this candle coming down here, spiking this place, clearing all the stop losses that were placed here. That's what we call liquidity grab. That's the liquidity sweep. So this is the liquidity zone. This is the liquidity zone. And then suddenly it came down and spiked down and cleared all the stop losses before it now went up. So this is what we could call manipulation. We call this manipulation. Accumulation, distribution, and manipulation, and then distribution. Accumulation here, manipulation here, and then the distribution. After you had placed a buy here, you placed a buy here, put your liquidity, with your first stop loss around here. So the placing of the buy, the order, is what we call accumulation. Then suddenly there came a manipulation that took the price down to this place. That's the manipulation we call. And then to clear up all the liquidity that we put around here. And then before you know it, it starts accumulating. Still to the direction. It came down here, and then you see how the market started buying. So we also have put this liquidity sweep into consideration. I think I have like 3 minutes left. So let me push forward. I've been watching the time. So what is our target? We target liquidity areas, the equal highs, the equal lows, the order blocks, and all that. Then what do we also call order block? Of course, we know order blocks. So order blocks are in the last the candle. Sometimes we have what should we say? A ranging market, ranging and ranging and ranging. So this candle, the last candle here before this one that spikes up, so we call order blocks. I'm not to talk about that one. I'm not to talk about that one. So that is what I have to explain in that market. That's what I have to explain. So to recap what I have said, is not what we don't use one method to decide on the market. There are other things that we use. You consider the order block, consider liquidity sweep. We need to consider liquidity sweep before we place our buy or our sell. The imbalance is not just enough for us to stand there and place our trade. But definitely what happens is, first of all, what you do is to cut your imbalance zone. After you have cut your imbalance zone, then you now then wait for the price to come there. You don't just, if the price does not tap into that zone, don't enter that trade. Because one thing about trading is there has to be patience. If anybody has no patience in trading, will not win in trading. Will not win. You have to be patient in trading. If the price does not tap, if the candle does not tap into that zone, don't enter. Supposing you were like this zone that I just marked here. I just marked this now. And this price that came here didn't reach this zone. It stopped somewhere here. It stopped somewhere here. Don't enter. So sometimes, like me, sometimes it's not every time that it will have to tap, but most of the time they will have to come to what we call like the imbalance that we spotted. It will have to enter that imbalance. If it does not enter the zone of that imbalance, don't enter. Because if you enter, the price might decide to change its character. It might decide to change, come to that imbalance and then start selling more. Because you were not sure. You were not, something has to, you have to establish a certainty before you now enter that market. If it does not tap into that zone, you leave it. Definitely it will come back and tap into that zone and you take your safe trade. I think I've really gone far. So I would say finally in a parting word, don't treat imbalances as standalone signals. Like I said, combine them with market structure, order blocks, and liquidity concepts to filter high probability trades. That's what we do. Combine it with other things. Like I just showed here in the market structure. Look at the direction of the market. You don't just trade because it has entered the zone. What is the trend of the market? You need to establish the trend of the market. In a bullish trend, we always say, like, Zige showed us a whole lot of this yesterday. He gave us, we saw the diagram that he drew yesterday. And for market to be a bullish trend, he has to keep producing more higher highs and the lower lows. Higher highs and higher lows. Yes, for it to maintain that trend. Then if market starts producing higher high and you see it produce lower highs and lower lows, you must understand that the trend has changed. So that is what we consider. Thank you very much. If there's any question, please, I will answer. And I also need corrections. Thank you so much. I'm grateful. God bless everyone. I will unshare my screen. Hello, sir.
Yes, we are with you.
Okay, I thought I got paused and nobody heard me again.
Dr. O, are you there, ma?
Yes, sir.
So
I'm here. I'm here.
Should I unshare?
Yes,
Okay.
sir. Thank you so much, sir. Thank you, Mr. Ime. Thank you so much. Yes.
Should I unshare my screen?
Can you hear? Yeah, can you hear me?
Yes, I'm asking if I should unshare, or is there anything that I need to explain more on this?
You can unshare, but
questions though.
Has a question. Let me look at the chats. Yeah.
Okay, somebody has a question. Okay.
I have question. I know the right because I want a serious question.
Okay, Dr. Love, go on, ma.
Okay, thank you. Mr. Ime, good job.
Stop
yes,
recording, guys.
Okay.
Just stop recording.
Stop recording, yeah. Mr. Ime, good job you have done. I have